Good morning, everyone. As you step out into the world and begin your daily routine, you might not realize just how connected your morning commute is to a vast global network. The simple act of driving to work, catching a bus, or even buying groceries is all part of a much larger story, one that stretches across continents and oceans. That gas station price you see each morning is more than just a number. It's a signal from a vast interconnected global system. Every time you glance at those changing digits, you're witnessing the outcome of countless decisions made by traders, governments, and companies around the world. The price you pay at the pump is shaped by events happening thousands of miles away, often in real time. Oil prices shape the cost of shipping, travel, and the products we use every day. From the food on your table to the clothes you wear, nearly everything has, at some point, relied on oil to reach you. When oil prices rise, so do the costs of transporting goods, flying planes, and even heating homes. It's a ripple effect that touches every corner of our lives, often in ways we don't immediately see. When oil supply is steady, prices stay calm. The world's refineries, storage tanks, and shipping routes work in harmony, keeping the flow of energy smooth and predictable. This stability allows families and businesses to plan ahead, knowing that the essentials they depend on will remain affordable and accessible. But a single disruption, a storm, a political crisis, or a conflict can send shockwaves through the market. Suddenly, what seemed routine becomes uncertain. Ships may be delayed, refineries might slow down, and prices can spike overnight. These moments remind us just how fragile and interconnected the system really is. Just this past weekend, events in Russia jolted global energy markets, reminding us how quickly distant events can hit home. A single headline about a port reopening or a supply chain disruption can trigger a chain reaction, affecting not just oil traders, but families and businesses everywhere. This is about more than economics. It's about how global events affect our wallets and daily lives. When prices jump, families may have to rethink their budgets, cut back on spending, or make tough choices at the grocery store. It's a reminder that the world's biggest stories often play out in the most personal ways. Let's break down what happened, why it matters, and what it means for you. We'll explore how a single event can ripple through the global oil network, shifting prices and changing the way we live and work. We'll walk through the key events, the market's reaction, and the questions that remain. By understanding these connections, you'll see how the world's energy story is also your story, one that unfolds every day, often without us even noticing. Because understanding the story behind those numbers helps us all prepare for what's next. The more we know, the better equipped we are to navigate the ups and downs of a world powered by oil. Last Friday, a major Ukrainian drone attack hit Russia's Novorossiysk port on the Black Sea, a critical hub for Russian oil exports. This port, along with the Caspian Pipeline Consortium terminal, moves about 2% of the world's oil supply. The attack halted operations, instantly raising alarms about global supply. In oil markets, even a small disruption can trigger big reactions. The uncertainty, how bad was the damage, how long would the port be closed, sent traders and governments scrambling for answers. Ukraine's strategy is clear: target Russia's energy infrastructure to disrupt its war funding. The world watched anxiously, waiting to see if this was a short blip or the start of a bigger crisis. News of the port closure sent oil markets into a frenzy. Traders rushed to buy oil futures, betting prices would rise as supply tightened. By Friday's close, both Brent crude and WTI jumped over 2%, a massive move in such a huge market. This spike wasn't just numbers on a screen, it threatened to raise fuel costs for everyone, fast. Higher crude prices ripple through the supply chain, hitting gas stations and consumers within days. The market was on edge, hanging on every update about the port. Would this be a brief scare, or the start of a painful period of high prices? The answer depended on how quickly Novorossiysk could get back online. The world held its breath. By Sunday, the story shifted. Satellite data showed tankers moving again at Novorossiysk. Operations were resuming. When Asian markets opened Monday, relief swept through. The immediate crisis was over. Oil prices quickly dropped, erasing most of Friday's gains. Brent and WTI futures both fell nearly 1%, signaling a return to stability. This rapid reversal showed just how sensitive oil markets are to news. But the relief was only temporary. The weekend's events left a mark, reminding everyone how vulnerable global energy supplies remain. The port was open, but the risks hadn't disappeared. The market braced for more uncertainty ahead. Oil prices swing wildly because the market is driven by both facts and fear. Every day, millions of barrels are bought and sold, but what really moves the price isn't just the physical oil. It's the psychology of the people trading it. Investors, traders, and even everyday consumers are all influenced by headlines, rumors, and expectations. The oil market is a living, breathing organism, constantly reacting to the world's anxieties and hopes. Think of it as a giant scale. Supply on one side, demand on the other. When supply is steady and demand is predictable, prices remain calm. But the moment something changes, whether it's a new discovery, a political crisis, or a sudden surge in travel, this delicate balance is thrown off. Even the mere suggestion of a shift can send ripples through the market. News of a threat, like the port attack, tips the scale, even before any real shortage hits. The market doesn't wait for confirmation, it reacts to the possibility. Traders start to imagine worst-case scenarios, and that fear alone can send prices soaring. It's not just about what's happening, but what people think might happen next. Traders react instantly, buying futures and driving prices up on anticipation alone. In these moments, emotion often outweighs logic. The rush to secure oil contracts can create a feedback loop, where rising prices fuel even more buying, and the cycle continues until the news changes. When good news arrives, like the port reopening, the panic fades, and prices fall just as fast. Relief sweeps through the market, and the same traders who rushed to buy may now scramble to sell. The market's mood can shift in an instant, turning fear into optimism. The market isn't just about barrels, it's about emotion, speed, and information. Every tick of the price reflects a tug-of-war between hope and anxiety, between those betting on scarcity and those betting on abundance. The psychology of crowds plays out in real time, with fortunes made and lost in seconds. In today's world, news travels in milliseconds, and trading algorithms act in the blink of an eye. Computers scan headlines, social media, and economic data, making trades faster than any human could. This speed amplifies every rumor and every fact, making the market more sensitive and more volatile than ever before. That's why a Friday attack can spike prices, and a Sunday update can bring them back down before Monday morning coffee. The oil market never truly sleeps. It's always digesting new information, always adjusting to the latest developments, no matter the hour or the day. The oil market is always looking ahead, pricing in tomorrow's risks today. Analysts and traders constantly scan the horizon for anything that could disrupt the flow of oil, weather events, political decisions, or technological breakthroughs. Every forecast, every prediction becomes part of the price. It's a volatile, forward-looking machine, one that reflects not just the world's supply and demand for oil, but also its collective hopes, fears, and expectations for the future. The port reopening brought relief, but the risks are far from gone. Ukraine's attacks on Russian energy infrastructure are escalating, with recent strikes on major refineries as well. Attacks on refineries threaten supplies of gasoline, diesel, and jet fuel, impacting both Russia and global markets. Each successful strike shows Ukraine's growing reach, keeping traders on edge. Unlike past risks from OPEC or the Middle East, this is an active war zone targeting a top oil producer. The unpredictability is hard to price in, fueling ongoing volatility. Every new attack or explosion could trigger another price spike. The shadow of disruption now hangs over the market, ready to return at any moment. As if physical threats weren't enough, the global oil market is about to face a fresh wave of uncertainty. New U.S. sanctions are set to hit Russian oil, adding a whole new layer of complexity to an already volatile situation. These measures are not just symbolic, they're designed to disrupt the very core of Russia's oil industry, which has long been a backbone of its economy and a critical player in global energy flows. After November 21, 2025, companies around the world will be barred from doing business with Russian oil giants Lukoil and Rosneft. These two companies alone account for a massive share of Russia's oil exports, and their exclusion from international markets will send shockwaves through the industry. The sanctions target not just direct sales, but also financing, insurance, and shipping. making it nearly impossible for these firms to operate as they once did. This is forcing a global scramble among traders, shippers, and refiners to unwind existing contracts and reroute oil flows. Companies are racing against the clock to adapt, seeking alternative suppliers and new logistical solutions. The entire supply chain is being reconfigured in real time, with every player trying to minimize losses and avoid getting caught in the crossfire of regulatory changes. The big question now is just how much Russian oil will be stranded at sea or in storage, unable to reach its usual buyers. And, perhaps more importantly, how quickly can Russia find new customers willing to take the risk? The uncertainty is palpable, with tankers left in limbo and barrels piling up at ports. Sanctions could temporarily remove a significant chunk of supply from mainstream markets, creating bottlenecks, logistical headaches, and sudden price gaps. The ripple effects could be felt far beyond Russia, impacting global energy prices, and even the economies of countries that rely on Russian oil. Russia will undoubtedly seek new buyers, especially in Asia and other regions less aligned with Western sanctions. But the transition won't be smooth. New trade routes must be established, payment systems reworked, and trust rebuilt with unfamiliar partners. Every step is fraught with risk and uncertainty. The market now faces a double threat: physical attacks on infrastructure and regulatory barriers that disrupt the flow of oil. Security concerns and legal restrictions are now intertwined, making the landscape more unpredictable than ever. For traders and analysts, predicting prices just got even harder. Every headline, every new regulation, and every military maneuver can send prices swinging wildly, making risk management a daily challenge. In today's oil market, military actions and international law are now equally important pieces of the puzzle. Navigating this new era will require not just financial savvy, but a deep understanding of geopolitics and global security. Beyond Russia and Ukraine, other global choke points threaten oil flows. The Strait of Hormuz, for example, sees 1/5 of the world's oil pass through daily. Any disruption here would have catastrophic consequences. Recently, Iran seized a tanker near the strait, reminding everyone of the region's volatility. Even a single incident can raise insurance costs and risk premiums, driving up prices worldwide. The global oil system is a network of arteries, block one, and the whole system is at risk. Stability depends on peace and cooperation in several hotspots at once. All these global events eventually hit home. A drone attack or a seized tanker can mean higher gas prices at your local station within days. Rising oil prices ripple through the economy, affecting food, travel, and everything delivered by truck or plane. Even a brief spike can stretch family budgets and fuel broader inflation. But the market can also correct quickly, as we saw this week. The system is volatile, but it's also resilient. By understanding these risks and supporting diplomatic solutions, we can help smooth out the bumps. The journey won't be easy, but knowledge is power. Staying informed helps us all navigate the road ahead. Our global economy is connected, and so are our futures.